Hey, it's Richard with Matthews Wealth Management. We're going to be covering the 2025 market update for M2 money supply and the Federal Reserve balance sheet. So, if you take a look, this looks pretty familiar as far as the slope, except towards the end of it, which, hey, we're at a new all-time high on money supply. So, if you take a look from the COVID fiasco, where they just printed obscene amounts of money, it had been dropping, and then you had the Valley and Signature Bank collapses nearly. But since then, we've actually started the wrong trajectory. We're increasing money supply again while we're not in a lockdown, while we're not actively in war. So we're just going to print money for lots of reasons. But to get into the actual numbers here, 22 trillion, 322 billion, $400 million are floating around out there chasing all the same goods and services. So that means prices are going to reflect that. If you look at the last month, we've actually seen an increase in money supply by 0.11%. Not a lot, actually. That's not a big deal in the grand scheme of things. But when you look at the last year, 4.27%, that's more inflation than you want to see in your prices, and that's exactly what we're seeing here. Going back since COVID, pre-COVID, we have increased money supply by 44.8%. That checks out, right? I mean, this is very simple. As there are more dollars coming in and going around, then that just means all the prices go up. It is not a supply thing. It is not a demand thing. It is not a greed thing. It is just more dollars worth less and less money. So let's look at the asset side of it. This is where the Federal Reserve likes to buy assets, mainly bonds, out of the market. And how do they do that? They print money. They're the only ones who can legally counterfeit. So they print it up, they buy it, and then they hold these things. And once these bonds come due or once they're sold again, they get to delete those dollars. And so that's what we've seen since the spike and the peak during COVID. Again, you can see a Silicon Valley and Signature Bank fiasco, that blip going on right in the middle here. And if you notice all the way down at the bottom, there's a spike, right? And that spike is problematic. That's a very short-term thing that's happened last week, as a matter of fact. If you follow gold and silver prices, you know what I'm talking about. There was a structural bank that needed a bailout overnight a couple of times just so they didn't start another too big to fail crash. But that should tell you something. There's a lot of liquidity issues. Derivatives are a concern when you're looking at gold and silver. And so I'm actually looking at our ETF holdings. If you have the physical stuff, you should be thrilled. It's definitely a good thing. But the paper stuff, there's a problem. And we may see this continue to spike. But that's the trajectory. And that's actually a positive in the long run. But in the short run, there's a little bit of a fear thing. So $6.5 trillion is parked at the Fed. Remember, we printed 22 trillion total, and roughly a third of it is at a private bank cartel where they get to make profits on it. Yeah, that's the problem here, and it is that simple. A month ago, that was almost 0.6% less. Here we go. That's the buying, right, in the 1 month. But look at the 1 year. It's a good trend. They've destroyed 4% of dollars by selling off those assets out into the market. And from January, our high was 73% of balance sheet increase post-COVID. And we're back down to 57.5%, but obviously it's starting to increase again. Quantitative tightening is when they were selling it. You've heard about quantitative easing starting back up. Trump just authorized the Fed to start buying up, or not the Fed technically, indirectly the Fed, but directly it's the GSEs, it's Fannie Mae, Freddie Mac. They're the usual suspects that are creating no house left behind 2.0. So expect this to continue. So when we look at the total picture here, balance sheet has actually shrunk by $280 billion. I don't think y'all really understand what billion means versus million or trillion, but whatever. M2 growth was the wrong side of the zero. So $914.4 billion increase in money supply while they were selling off $280 billion of assets means that Congress has just continued to go crazy. So in 2025, it was $1.195 trillion that had to be printed because we need to spend it so that we can grow the economy at higher interest rates. Whatever. It's flawed, but it's the way that the world works apparently until it doesn't. But stay tuned for the next one, I suppose. But just a recap of 25 and what's going on with our dollars and the Fed.
Flamingo.